Welcome back to Weenie Trades. So in this video, I'm going to be giving the weekly game plan. So I'm going to be starting out with the ETF overview, stocks that I'm watching to potentially trade, and then community requests from the Discord. So let's get started. SPY was pretty bearish on Friday. Nothing too crazy, just, down a little bit less than 1%. Overall, nothing too crazy, but it is showing some cracks in the armor. I do think that we could be starting a correction short term. So let's take a look on the SPY and let's find some levels. If SPY continues to sell, I think we might see a little bit more selling earlier in the week. We might come down and test this little congestion area. Do we see this right over here? Right about here. This little doji candle right here. That lets me know there's a little bit of consolidation down here at 428 all the way down to 427. So this is a little demand zone. If we were visiting this early on Monday, we might see a little bit of a bounce. Otherwise, SPY, if it starts to kickback rally, I do think that could be an entry for to short again. Probably just underneath 435, so 434.70s might be an area of resistance if we're bouncing earlier in the week. But the shorter term time frames are pretty clapped. If we look at the hourly chart, just no hourly consolidation besides this little right here. This is the only hourly consolidation. Drop. Bear flag, drop. That's a perfect symmetrical bear flag. So let's see, we've already popped the bear flag to the downside. Are we going to continue to get oversold and more extended to the downside? Or do we see a little bit of a kickback rally? I am swing trading short on SPY right now. I own the 433 strike put and I'm selling the 430 strike put. So I take the max credit of $300, right? Because it's a $3 wide spread. If SPY closes the week underneath 430. So we'll see how this trade continues through Weenie Trades Live. Next up, we've got the Qs, and the Qs are showing relative strength simply because it's higher on the chart. And we just had this nice, good, steady channel. Look at that. We started to break the channel just a little bit, and then Qs start to sell a little bit. So the QQQ, I'm going to be watching this 353 area early in the week if we continue to sell. Otherwise, if we kick back rally, we could do something like a back test where we back test this level and then sell. I'd be very surprised if the Qs just shot up and made new all-time highs. That seems like the least likely scenario. So when we're looking at components of the Qs, let's keep an eye out on Amazon. Amazon's a trade setup for this week. I really do like Amazon into 3,500, that nice whole number, and the previous all-time high area. So watching this whole area for a bounce, and I might grab some long options, some vertical call spreads, whatever it may be. And Amazon, just remember, this is a monthly breakout. So we had the monthly consolidation. We broke out. Now we're starting to back test it. Can we continue and hold? And then if so, we can see multi-months of Amazon going up. Let's quick check on something like Google. I like Google for a trade setup this week as well. If we look at the daily chart, I'm a Google fanboy. I like investing in Google. I like trading Google, even though the spreads may be pretty awful. I don't mind swing trading Google, but down there into this 2,500 zone, it could be a good dip buy for me on Google. Otherwise, if Google comes down to 2,450, that would be just fine and healthy. And after it bounces, place the stop loss just beneath those lows. Keep an eye out for Google and Amazon. Those are my favorite trade setups. And then I'm going to be watching Netflix for earnings. They're on 7:20, so Tuesday after market session. So we'll probably be day trading. I'll be day trading at least Amazon or Netflix on Wednesday. Maybe there's a little bit of support down here at 515 and we bounce. Maybe there's a little breakout over 560. Otherwise, could just be right in between. Let's see what the options chain is predicting for expected moves on Netflix. $36. Netflix can move quite a bit more than $36. We'll see if this report has any significance and it can push outside the expected move. Then longing options may be the way to go. I generally like to trade after earnings though. So we'll just see if there's going to be an IV crush or not on Netflix. Next up, we've got the XLF, the financial sector. And last week I just said, the financials, nothing too crazy. Look for this to go sideways to slightly lower. XLF just went sideways. The banks reported earnings. They did good on earnings, but they were expected to do good on earnings. Therefore, the sideways action makes a little bit of sense, right? So if the XLF, comes underneath, 35.50, that could bode a little bit more to the downside, and that could drag the overall indices a little bit lower. Look for this bottom zone down here at about 34. The XLF's a turtle. I mean, maybe it can get an outsized move. Maybe this is like a topping formation, a rollover formation, not in a perfect exact head and shoulders pattern, but you get the idea. Left shoulder head, right shoulder losing momentum. So keep an eye out on the XLF. let's check out the IWM. IWM starting to break a little bit bearish. A few weeks ago, I said the IWM is normally is a leader, meaning when the IWM goes up, the overall markets tend to go up afterwards, and because the IWM is leading. But lately, I've been saying the IWM has been lagging simply because it's just gone sideways as the overall indices have gone higher. We've been talking about these lower wicks. Nothing too bearish just yet. But if there is crazy inflation fears, the IWM could get a little bit more of a decent correction. Well, we got this. Where could the IWM go on that correction if we start to drop and start like a new downtrend? Maybe we start to dip by in this, maybe we start to sell off into this 164, 170 area. And I do think that that would be the long-term dip buy on the IWM. I am bullish long-term on the overall indices and the IWM. I'm just looking for a potential short-term correction that may be small, it may be medium, it may be big, but I don't think it'll go bigger than about 10 to 12%. So keep an eye out on the IWM. Next up, we've got the VIX, and I am long the VIX. As we can see over here, I own the 18 strike call expiring July 28th, and that's just slightly at the money. So if the VIX continues to explode higher, what's the delta on this option? 0.71, so that's a pretty good delta. I might get paid pretty well if the VIX starts to explode, and I'm just targeting this about 24, 25 area. That would be a pretty decent market correction, but it's not out of the ordinary. I don't like to chart up the VIX too much, but obviously VIX is usually always in a downtrend. But as it starts to get lower and lower, sometimes any little bad news event can pop it just a little bit. So just expecting a short-term correction. If it doesn't happen, that's fine. I don't have too many crazy short positions. I usually like to just get into cash and just short just a little bit. I don't like to short the market very heavily just because of the massive whipsaws that can, and violent moves to the upside that can happen. So keep an eye out on the VIX, and let's get into my trade setups. So first of all, we talked about that Google dip trade at 2,500. I talked about this Amazon trade that I'm looking for into 3,500. But what else am I looking for? Well, if you're looking for some short candidates, I do think Uber is one of the weaker names. It's just been trying to hold a bid and just keeps on failing. We got a false breakout over here, lower high, lower low. Let's see if Uber can break down. And it could take a swing short duration put option, maybe so put vertical. And I don't think Uber would go much lower than about 38.64. So keep an eye out on Uber to the downside. Next up, we've got GameStop. GameStop to the downside. GameStop, we started to spike really high. Then we did this nice, good little descending triangle. Boom, we broke down. We kickback rally. I said, as long as GameStop's beneath 200, it's bearish. We got pretty close. We got as high as 197 in the middle of the week. And then GameStop started to really flush. Now we've turning 179 into resistance. So expecting GameStop to flush and maybe come down to this 140, 137 support area. If not this week, maybe in the next coming weeks. So keep an eye out on GameStop. And then lastly, I want to check out AMD. I've been looking for this dip trade on AMD. We talked about this, how I want to see AMD at about that 85 level. Well, we moved higher, we hit resistance, we pulled back, we put in a lower high, we did our H pattern. Now I'm expecting a little bit of a bounce at the bottom of this little zone, call it 84.43. I don't want AMD coming too much beneath 84.43. There is a little bit more support at about 83.09. That might be for the longer term trends. AMD to me is just fine as long as we're above 75. So that's for my long-term positions. As long as AMD is above 75, it's good to go. But ideally, I'd like it to hold this 84 area. So keep an eye on a dip buy for AMD. And just while we're talking about AMD, NVIDIA is a crazy sell momentum the last few days. Just no buyers. It's like everybody tagged out of their stop losses. Everybody that bought was in it for the front side of the move. And now if they're trapped, buyers are trapped, sellers are taking over. NVIDIA might bounce off this 720 level. This is the top area of this little congestion area. If we talk about the midpoint of the congestion area, that's right at about that $700 a share. So maybe you could go a third at the top end, a third at 700. And then the last third, which I think NVIDIA might get to just because of the momentum and veracity, whatever. It was ferocious the way that NVIDIA sold off. So NVIDIA coming out down here, I want to dip by at about 687 down to 685 with a stop loss just beneath 680. So keeping an eye on NVIDIA, and let's get into the community requests. So Clues asked me to break down Workhorse. So Workhorse, crazy stock. We made a nice, good, explosive parabolic high. And look at this. We started to do a little bit of a rising wedge. that was a sell setup right there at about 37, and it just really started to break down. I made a joke that day about, why would you short Disney? Why don't you short Workhorse? And Workhorse just proceeded to drop like 60% that day. Absolutely hilarious. But what's Workhorse doing now? Well, if we look at the recent price action, we are doing nothing but selling off. This company's got a lot of troubles with going on with them, at least just based off the chart. You know, we made a low down there at 7. We made a high up there at 19. We put in a higher low at 14. Then we put in a lower high at 18. And now we just made a lower low down at 12. Lower high, lower low. So we already made our lower low. Maybe we get a small little bounce, but expect all these areas to become resistance now. So now the new resistance is 1160, you know, up to, you know, 1260. So expect Workhorse to come down, and maybe it finds a little bit of support at $10 a share. I expect Workhorse to come down to 10, and unless they get their business model changed or something going for them, they need to get more contracts. I expect Workhorse to just zigzag and make lower highs and lower lows and just become irrelevant. Maybe it gets a random news spike and pops, but look for Workhorse to go lower. Maybe if it starts to break 1174, we could see it up at the next resistance at 1267. So that's Workhorse for you, clues. Next up on our list is Tesla and TSLA. Tesla was actually a really good short trade for me last week. You know, just shorting underneath 665 and just taking some profits off at 645. But Tesla, you know, we made a high. We talked about these upper wicks, how these upper wicks showed more sell pressure than buy pressure. We sold off, we hit double support, we hit the rising trend line, and we hit the top end of the demand zone. And we came back, we hit the supply again, and now we sold off. So what we're looking at here is an equilibrium. So we have our low, high. We're expecting a higher low because of the size of this bounce. We're expecting a higher low to come. Maybe it doesn't come, but we'd expect a higher low. And then now I'd be expecting a lower high because of the size of this sell-off. So you always expect a lower high after that massive sell volume and candles after those 4 days. So look for a lower high. I'd be surprised if Tesla got above 680, but anything beneath 680 I do believe is a short. I'm leaning more bearish as Tesla potentially gets into a tightening range, and still looking for that dip buy on Tesla at that, you know, 500 down to, you know, 460, 463, and of course down there at 420. And I wouldn't want Tesla coming really much underneath 350. If Tesla comes underneath 350, it's a little bit sketchy, but, you know, Tesla, look for that to be slightly sideways to bearish on Tesla. Next up, we've got ARKK, and ARKK, I used to love it as an investment. It did really well. Now I'm starting to like it just a little bit less because of the way it's trading and because of these inflation fears. So a lot of these high multiple, high growth tech stocks and other growth stocks in the ARK fund, they could get absolutely clapped if there's way more than expected inflation. And that could bring ARK, you know, down here in the 80s area. But short term, let's check out ARK. You know, we talked about this, you know, bear flag, you know, this pennant. And then that broke down nicely. But then we kickback rallied right into, you know, the top end range of the pennant. So we're still within this congestion range. If ARK can hold 113, 114, maybe we see a little bit of a bounce up to 121. But if we can't really hold it, expect a little bit of support at this trend line down at 109. And then if 113's resistance, look for more lower lows down to 99. I'd be surprised if ARK started to break out. The best case scenario for ARK is to move higher and then pressure up there, you know, build a little bit of a base and then pop bullishly. So ARK, not the best right now. I need more data on ARK to decide whether it's going to develop well or not. But yeah, for now, especially with the market sentiment, I'm leaning sideways to slightly lower on ARKK. So hopefully you enjoyed that Tesla and ARK analysis, strong like bull. Now AMC over here, let's see what AMC is up to. We talked about AMC. We got the first squeeze. The question was there going to be a second squeeze? And right about there, no squeeze. So no squeeze. So now AMC's in downtrend territory. We know it's overvalued still. And the way it was trading on Friday and the other days, it just didn't seem like the buyers really wanted to hold it up. If we're this oversold into a support level, you generally expect a bigger bounce, probably up to about 42 to at least 44. The fact that it didn't bounce means that it's more bearish than it is bullish. Now, AMC, as long as we stay above 33, 35, I do think that we can still see that bounce. But if we start to give up that 33 at 35 level, and then we start to, you know, bounce and break support, look for AMC to get absolutely murdered, as buyers will be trapped people that loaded and over leveraged in AMC might get trapped, and that can create more waterfall sell-offs. If in the event of a waterfall sell-off, look for about $20 a share to be support, and maybe a little bit of support at 24 to 25, coming up first, but that might just be like a little bit of a dead cat bounce before reaching that $20 a share. So be careful on AMC in the event of the bounce. Where are these resistance levels? Well, where we, fought quite a bit. We fought quite a bit up here in the 50 up to 47. I don't think we see AMC above 50 ever again, unless, of course, we get a lot more buyers. So I'm calling AMC never will be above 50 again, unless we get just a ton of buyers and news catalysts and, the naked short sells were discovered and the apes tended to take care of it and, take advantage of it. So AMC, a little bit in trouble. If AMC can get above short term, above that 38, that's still that breakout area, then AMC could see this 40 and then potentially up to 42. But I wouldn't expect it to go too much higher than 42 because of this downtrend. We have our high, lower high, lower high, lower high, and then the lower highs just got non-existent. We just started a waterfall sell-off. So AMC, be very, very careful on it. In my humble opinion, this is just an opinion. Nothing has to happen. Everybody's got an opinion. It's fine. No need to gripe about it. Next up, we've got Boeing, as indicated by Sri, or asked by Sri. Nice, good stuff, Sri. Thanks for hanging out in the Weenie Academy. But we've got Boeing over here. So Boeing, where is it likely to go? Well, this is pretty bearish. We failed to move higher. We had our high, low, lower high, higher low, lower high. We have our equilibrium, and then we broke bearish. Kickback rally to resistance, bearish. So Boeing, I'd got to lean bearish. We are a little bit extended. We're 1, 2, 3, 4 days down in a row. And watch out for earnings on Boeing. It sounds like they're having a ton of issues with their flights, flights and planes. So look for Boeing to probably come down to this 207 to 209 area in the next coming week, especially with the market bearishness. That could be a dip buy for a little dead cat bounce. But other than that, I am not interested in Boeing or the airlines at all. They weren't that profitable before, and then let's say we get rising fuel costs and inflation goes crazy. Then people start flying less because of those rising fuel costs, and it's just a disaster, and definitely an industry and market that I want to stay away from. Yeah, you could short it, but there's no good trade locations for the shorts on the airlines and Boeing. So yeah, not my favorite. We'll see. Time will tell, and we'll be evaluating Boeing at Weenie Trades Live. It always offers good momentum and volatility intraday, so we'll be seeing if I want to day trade that or not on Weenie Trades Live. Lastly, we've got YMM, and YMM, Full Truck Alliance Company. I've never heard of it before, but it looks like it's a relatively new stock. So we have our highs up here at about 22.80. We have our low, lower high, lower low, lower high, lower low. Now we're starting to potentially get a trend change. So this is our demand zone down here. These are our supply zones. And let's just grab some wiggles over here. So this is going to be an area of resistance. And what I'm watching for right now is, does this little consolidation break bullish or bearish? And it kind of looks a little bit indecisive. The last 2 days of price action, this was a little bit of a doji, but this one is a little bit more bullish because look, we closed in that upper third. Even though it's a red candle, I don't really care about that. It closed in the upper third. We'll see if this could maybe, let's duplicate the flagpole right here and let's just extend it from the breakout level. Yeah, that would put, YMM, if it starts to pop, call it, you generally want to wait for total confirmation over 1817, so 18, call it, and then there's mini confirmation over 1750, so maybe you could do like half before and then half as it breaks out. But look for some resistance up here at 19, and I don't think YMM goes higher than 20 because we've already retraced so much of the move and we failed up there at about 20.50. So be careful. Otherwise, we could break bearish underneath 1683, and that's if we take out those lower wicks on volume. The volume's kind of drying out, so we might just kind of pitter-patter for a while. But if the volume starts to go, we could see an outsized move to the downside or an outsized move to the upside on YMM. So that concludes this weekly game plan. Thank you so much for tuning in. Leave a comment below. What do you think? What do you agree with my analysis? What do you disagree with my analysis? I'm always down to listen to both sides. So thanks for tuning in, you guys. See ya.